Hi, I'm Martin McGrath from Financial Edge Group. We work with people to help them set themselves up for retirement, building assets through shares, property and super. And one of the questions I commonly get is, can I use my super to buy a property? The short answer is yes. In your industry funds and your retail funds, you've probably got some property, but it's indirect. What we're talking about today is a rental property down the street in the next suburb over in a major capital city. The answer is yes. There's a bit involved, but it can be done. So I'll talk you quickly through what that looks like. Basically is you need to set up what's called a self-managed super fund. That's basically the only way you can buy property directly in super in Australia. So once you've got a self-managed super fund, you figure out what super you've got in other accounts and you roll that money in. Now, one of the good things about self-managed super funds is you can have more than one person in that super fund. As it stands today, you can actually have up to 4 people in there, and the rules are about to change that you can have up to 6 people in there. So that might be family or friends or relatives or that kind of stuff, and you kind of go, hey, let's combine our super together. Let's all put 150 grand into a super fund. We've now got 600 grand. Let's go buy a rental property with that money. That's effectively how it works. Ideally, if you can, you want to have enough money in there to buy the property outright. It's just the best way to do it. It saves a lot of money on fees and costs in the process. Once you've purchased it, there's a lot more flexibility with what you can do with that property. In saying that, you can actually borrow to buy property in super. So if you don't have enough, you've only got say 1 or 2 people and you've got 200,000 or 300,000, that's not enough to buy a property outright. You can effectively go to the bank and say, hey, I want to buy a property. It's not the same, it's not as easy as buying a property in your own hands. There are some different rules and restrictions to do so we can have a look at whether that suits. But you can borrow to buy a property in super as well. The rules are a little bit different though, in the fact that it's the super fund's property, it's not your property. So what that means is the good things are the super fund has to pay all the costs, it pays the agent, it pays the insurances. Also, the way it works is it receives the rent, so the rent goes straight to the super fund, it doesn't go to you. And any contributions coming from work can also go into your super fund. One of the big restrictions is that when you buy a property in a super fund, it has to be for investment purposes. So what that means is you can't live in it. It can't be a holiday home. You can't rent it out to a friend or a mate to look after them and give them a good deal. It has to be for investment purposes. So it's not a house or a weekend that you want to live in. You want to rent it out. You want to get a good return on it to basically make money for your retirement. Once you do that, once you set it up, ideally you buy that. You might save up enough deposit to go buy a second one and set up and structure your super around that. I've done plenty of other videos that explain what are some of the benefits of buying property in super or buying assets in super. You pay substantially less in tax, more than half less in tax each year you hold it, and when you sell it, if you set up the right way and you sell it when you've retired, you'll end up paying no tax normally on that capital gain. So check out some of those other videos, but in direct answer to the question I got, can I use my super to buy property? The answer is yes.